Did we dodge a recession? Anxiety was high after losing 112,000 jobs earlier this year.
May brought a huge reversal. A massive 88,000 new jobs were suddenly added.
That awesome surge actually pushed our national unemployment rate right back down to 6.6%.
This effectively erased almost 80% of those early 2026 losses, basically crushing fears of a deep recession.
Now, what's really interesting is this massive shift toward full-time work completely offsetting ongoing part-time losses.
Plus, we saw solid gains literally across the board. Core-aged women, men, and youth all found work.
This builds some really positive momentum for the youth summer job market too, which is great.
So construction totally led these gains, while wholesale and retail trade kept sliding downward.
And this brilliantly illustrates how these job gains weren't isolated. They were widespread across the country.
Specifically, Ontario led the nation, which drove Toronto's unemployment rate sharply down to 6.8%. We also saw really strong regional boosts out west, in BC and Alberta, and over in Quebec. The crucial point is, despite this hiring boom, wage growth actually cooled down to 3%.
Will this crazy strong job rebound delay interest rate cuts?
Look, if you've been following the labor market recently, you know it's been a super bumpy ride. But the May 2026 numbers, they just dropped, and wow, they are painting a wildly different picture for the rest of the year.
So let's dive right in and address the giant elephant in the room, that big question hovering over all of us for the first 4 months of the year. We saw consecutive months of job losses, and economists were getting pretty nervous, right? Naturally, everyone was asking, wait, are we actually slipping into a recession? Well, let's see exactly what May had to say about that.
To answer that, we really just need to focus on one punchy number, 88,000. That's 88,000 jobs added in a single month. This surge essentially wiped out nearly 80% of all the net job losses we felt from January through April. It's a completely robust reversal that honestly caught a whole lot of people off guard.
Here is our roadmap for today. 1. Recession fears dispelled. 2. The full-time job surge. 3. Youth and summer jobs. 4. Who is hiring? 5. The return to office. And finally, number 6, what this means next.
All right, let's kick things off with Section 1. Recession fears dispelled, erasing the losses.
Notice this sharp, V-shaped bounce back. It's the visual definition of an economic save. We're talking about the first genuinely significant employment gain we've seen since way back in November of 2025. It's like the economy just slammed on the brakes and did a total U-turn. Now, breaking down the headline numbers, the so what of these stats is absolutely crucial. Yes, employment jumped by 88,000 jobs, bringing the unemployment rate down to 6.6%. But check out that last point. Average hourly wage growth decelerated down to 3.0%, dropping from a much hotter 4.5% just a month prior. Why does this matter? Well, this deceleration is actually a massive sigh of relief for economists, because it signals that inflation pressures might finally be cooling down even while folks are heading back to work.
Moving right along to Section 2, the full-time job surge, quality over quantity.
The contrast here is, well, it's incredibly revealing. You see, the recovery was driven entirely by a surge in full-time roles. We gained 154,000 full-time jobs, and that completely swallowed up a concurrent drop of 66,000 part-time jobs. So that 88,000 net gain we talked about earlier, it actually masks a much deeper structural shift toward full-time employment.
Basically, we didn't just add jobs. The economy aggressively rebuilt the core of the workforce that had been slowly eroding. Think about this. Between January and April, Canada lost 156,000 full-time workers. This single month of May practically neutralized that entire scary downward trend in one fell swoop.
Next up, Section 3, Youth and Summer Jobs, a Student Rebound.
After a genuinely rough start to 2026, young people finally caught a break. The youth unemployment rate dropped nearly a full percentage point to 13.4%. They've been facing a really tough labor market lately, with unemployment running consistently above pre-pandemic averages. So this improvement, it arrived right in the nick of time for all the important summer job season.
For the students heading back to work, we can see exactly where they're making their summer cash. Retail holds the top spot at 28.4%, But get this, accommodation and food services pulled in 23% of students. That's a strong 2.5 percentage point bump from this exact time last year. Clearly, a lot more students are out there flipping burgers and serving tables this year compared to that pretty dismal summer of 2025.
All right, Section 4. Who is hiring? Sectors and provinces.
This comeback wasn't just isolated to one lucky corner of the country. Nope, it spread like wildfire. It was incredibly widespread, anchored by the major economic hubs, driving down unemployment rates in big cities from Toronto all the way to Vancouver.
Drilling down a bit, Ontario practically carried the team here by adding 42,000 jobs alone. That pushes its provincial unemployment rate down to the lowest level we've seen since September of 2024. British Columbia bounced back with 25,000, and Alberta added 14,000 in May, boasting a really impressive 104,000 new jobs compared to this time last year. The only real outlier? Well, unfortunately, that was Saskatchewan, which shed just over 6,100 jobs.
When we look at specific industries, the gains were absolutely led by the builders and the movers. Construction surged by 27,000 jobs, while transportation and tech-related sectors followed close behind. But we do have to call out the persistent bleeding in the wholesale and retail trade sector. It shed 35,000 positions in May, and honestly, it's been trending downward since last October.
Let's shift gears to Section 5, the return to office, shifting workplaces. Take a look at the distribution here. A massive 78.8% of employed Canadians are now working exclusively outside the home. Meanwhile, hybrid work seems to have totally plateaued right around 10%. The data is basically proving that the traditional on-site office environment is steadily, undeniably reclaiming its dominance in Canadian work culture.
Actually, if we look at the historical trend, the 11.4% who are working exclusively from home right now, that's a massive 7.3 percentage point drop compared to where we were in May of 2022. So, like it or not, the slow and steady migration back to the morning commute is officially confirmed in the data.
Finally, Section 6. What this means next, the Bank of Canada outlook.
We have experienced a serious whiplash timeline here, haven't we? We went from a really worrying 112,000 jobs lost in the first 4 months straight into an 88,000 job gain in a single month. And now? Well, now all eyes turn directly to the Bank of Canada and their upcoming monetary policy decisions.
And this brings us to a really complex reality. The irony of this awesome jobs comeback is that because the labor market is suddenly so strong and because the economy clearly isn't breaking under the pressure, the central bank might actually hold off on cutting your borrowing costs anytime soon. They need to be absolutely certain that this job surge doesn't accidentally reignite inflation. So, it leaves us with a fascinating paradox to watch. We successfully avoided a recession and put tens of thousands of Canadians back to work. But will this very resilience cost us at the interest rate finish line? Are we essentially trading job security for higher mortgages a little while longer? That is the multi-billion-dollar question driving the next chapter of Canada's economy.